The financial crisis meant the mainstream banks retrenched from lending to business customers. So there was a need and a time for a new business bank, and we knew that there would be demand for that. But we also knew that, as well as a need for lending, that business customers wanted banks that were not only willing to lend to them, but could also take the time to understand their business models, be responsive to their needs.
Hi, I'm Belden Mankus. Welcome to the Purposeful Strategist, the podcast that shifts the conversation about purpose and strategy from what organizations should do to what business leaders are doing and what they've learned along the way. My guest today is Gary Wilkinson, Chief Executive Officer and co-founder of Redwood Bank, a business bank serving small and medium-sized enterprises. The bank operates from offices in Warrington and Letchworth. Its parent company, Redwood Financial Partners Limited, is part-owned by Warrington Borough Council. Since its launch in 2017, Redwood Bank has won multiple awards for innovation, loaned over £600 million in total to small and medium-sized businesses, and achieved a 93% customer satisfaction score. So I've invited Gary, the CEO, to tell us how they did it. Gary, welcome to the Purposeful Strategist podcast.
Thank you very much for inviting me.
Really glad you're here. So you played a really key role in launching the bank. Just interested to hear why and what was the problem you were trying to solve by setting up this bank?
Yeah, so I recognized that there was a need for an underserved part of the market. When we set the bank up in 2017. And that was basically because the mainstream banks had retrenched from business lending following the financial crisis. So we wanted to help fill that gap and to start to serve the SME, small and medium-sized enterprises of Britain. So our vision was a flexible and relationship-based British business bank that balanced traditional values with modern technology, and one with an appetite to actually lend to SMEs and to build lifetime strong relationships. So we're committed to supporting British businesses, helping them navigate the ever-changing financial and business landscape, and we offer secured, individually assessed mortgages and simple, rewarding business savings accounts. And we reached profitability in just 3 years, which is one of the fastest results for a startup bank.
That's really pretty impressive. It might be useful just to hear a bit about your background and kind of what got you to that moment where you said, there's a problem here we can do something about. There's a need that isn't being met.
Yeah, so I've had over 30 years of experience in the financial services sector. I've had senior executive roles at various institutions, to start with big institutions, so Alliance and Leicester Building Society, and then became PLC, Nationwide Building Society, Newcastle Building Society, and then I actually set up a similar bank to Redwood Bank, a bank called Cambridge and Counties Bank in 2012, which was a very similar business model to Redwood Bank.
You sort of talked about lending and supporting businesses. Would you say that's its purpose?
Yeah, that was the main reason, that was the main purpose of the bank. But you need to be able to fund those loans. So we actually are a fully operational business bank. We lend to businesses with simple, fast, transparent mortgages which are secured on commercial premises for business owners, or on commercial or residential investment properties such as buy-to-let. And we fund those by offering savings accounts to businesses, clubs, associations, charities and societies. So our purpose is basically reflected in our brand statement, which is "It's about time." And when we launched this was a statement that we thought was totally appropriate for a new business bank for British businesses. As I said earlier, the financial crisis meant the mainstream banks retrenched from lending to business customers. So there was a need and a time for a new business bank, and we knew that there would be demand for that. But we also knew that, as well as a need for lending, that business customers wanted banks that were not only willing to lend to them, but could also take the time to understand their business models, be responsive to their needs in a timely manner. And that's why It's About Time resonated very well with us.
Mm-hmm, mm-hmm. And that whole thing, if I've got it right, you and Jonathan Rowland co-founded the business. Did the two of you come up with that, or was there a bigger group? If you could take me into the room when you were actually developing that as the purpose, who was there? What were they talking about?
Yeah, it was mainly Jonathan and myself.
Mm-hmm.
Obviously, we had some advice and some support that helps us pull all this together. But the key thing was to agree on the purpose of the bank. You then establish what does the bank stand for, what is the brand. Our strapline is "It's About Time," but then we established 4 core values that actually are synonymous with that. And those 4 values are simplicity, tirelessness, integrity, and certainty. And these guide us how we behave at all times, what we deliver for our colleagues, our customers, and our community. And these are the values that are absolutely essential in order to be able to deliver on our purpose. And it starts with our employees. So we look for these values in our people, in our colleagues, from the start of the recruitment process and then through their performance development, and that includes 360-degree feedback. I meet with every single individual before they join us, and that's a very important principle for me, that everyone can talk to me, the CEO, before they join us, and then I continue to be available and accessible after they have joined. Now we've got over 150 colleagues. I still retain this practice. There's no ivory towers at Redwood, just human beings that share a purpose to offer a great experience to and make a difference to our customers. We treat each colleague and customer how each of us ourselves would like to be treated, and that has established a fantastic internal culture with an 87% what's called a positive staff engagement score, and as you've said, a customer satisfaction rate well over 90%.
So if I was a small customer looking to borrow from Redwood Bank, how would I experience the purpose and the values? How would that show up in how that might feel different to me as a possible new customer compared to how it might be if I went somewhere else? What would I notice is the difference?
Well, when interacting with us, you'll be treated as a human being and not as a number. There won't be a computer says no, because we don't actually use automated credit scores in deciding to whether to make a loan or not. We use experienced underwriters with the expertise that can be flexible and look at the actual individual circumstances rather than use a computer to suddenly say no. And then every time that there's a dealing with us, you'll get straight through to a human being. We don't have an automated answering service. You'll speak to a real person, and that's whether it's on the lending side or whether it's on the saving side once you've opened an account with us. So we're very much about putting the customer first, and it's the focus of the whole of our operations.
I'm going to have to kind of zoom in on that because you've said something that sounds really different, but also raises a question. So if I'm a customer and I've got a question or I need to do something, I pick up the phone and I call and I get through to a human being and they can answer my question.
Either the person answering the telephone can answer your question, or they can pass you on but not put you on hold for 2, 3, 4 minutes to a specialist, particularly on the lending side, more likely to be able to answer a question straight on the phone from a savings customer, but can put you straight through to the right person. Now, we're not 24/7. We don't have chat on the internet like other organisations do, but between working hours of 9 till 5, you'll speak to a real person, you'll speak to them quickly, and there'll be very few terminated calls where people hang up.
I thought a lot of other big banks did away with all that because it was too expensive. You're profitable. So what's the magic? How do you make that happen?
Yeah, well, it's all about the business model itself. So predominantly, most of our lending customers come through brokers, and the relationship will initially be with the broker. But if the customer does want to speak to us directly, then they are very welcome to, and we encourage them to do that. And we're not a bank that's based on doing masses of volumes. We're relatively small. As you said, we've lent over 600 million. We've only got 7,000 customers. I say only, but that's relatively small. And for those reasons, we can operate without using automated messages and trying to make customers answer the question themselves before, as a last resort, getting through to a human being. That's the opposite of what we do. We're about relationships. I like to call it traditional banking. But as you rightly say, a lot of others don't operate in that manner,
Yeah.
but we do.
And so how do you make sure everybody who works at Redwood Bank, that they kind of understand the purpose, that, that it sort of shows up in their behavior and their own decision making? Is it happen naturally, or are there things you have to do to make sure that happens?
We assess the individual as to whether or not we believe they've got the right culture before they start with us. There's intensive induction training that everybody goes through, and then we have regular update training, particularly in terms of how we deal with customers, how we interact with customers. There's regular annual training that takes place. We assess individuals based on achieving their objectives, but also on their behaviours as well. They are equally important than just achieving their own individual personal objectives. It's how they behave. And we assess people on whether they live and breathe the values of simplicity, tirelessness, integrity, and certainty. And that is taken into consideration on their annual appraisals. We are very, very much about communication. I host a monthly staff meeting call. Either most people would be in the office, or not everybody, and it's through Teams. So we communicate. We have monthly meetings, individual team meetings, individual one-to-ones. It really runs through the whole of how Redwood operates.
I mean, you've done really well. You've grown really fantastically. 8,000, 7.5, whatever customers. One of the fastest UK challenger banks to ever reach profitability. How would you sum up the strategy that's led to all of that?
Okay, so our purpose forms the heart of our strategy, and the values are reflected in what we refer to as a mission. And our mission is to become the UK's best go-to specialist business bank, working tirelessly to provide our SME customers with simple, clear products and fast decisions that allow their businesses to grow. So when we formed that strategy and set that mission, it was important that we stick to our purpose and use our experience and knowledge of the market and our business and broker relationships and customer insight to determine our approach and set out our targets. There's been a relatively recent introduction of what's called consumer duty, introduced by the FCA, which is all about ensuring that customers have good outcomes. And that simply reflects the approach that we've adopted at Redwood since our inception. We are entirely focused on our customers, their needs, and in making sure that what we offer will result in a good outcome for them. We balance this with meeting the needs of our investors, our shareholders, and our other stakeholders. And that makes sure overall that our business model is efficient and it's profitable in order to sustainably grow the bank. So we don't overcomplicate the process, we keep it simple, and we focus on what we want to bring to British businesses.
Just thinking about where you go next, do you feel that the opportunity to serve the types of customers you're dealing with now is big enough? You've got years and years of just carrying on doing more of that, or do you think you're going to have to start addressing different customer types or new products, or where does all that take you over the next few years?
Yeah, it's an exciting time for us, to be perfectly honest. I mean, it's been tough economic conditions, as we know, with interest rates being as they are and the cost of living being high. It's not been easy for everybody, and that includes banks that lend to people. We've reached a key milestone, which is reaching profitability. We don't take that for granted. We are always looking to develop further, to grow in scale, both in terms of expanding our existing products and the size of our balance sheet. That's in our plans. But we'll also consider diversifying into other ancillary products. At the minute, we just secured property lending, but we'll look at other business products in the future as we go forward, such as leasing, asset finance, invoice finance, and possibly even unsecured business lending. So no plans to actually enter those markets yet, but we will certainly look to consider those as we go forward in order to give a more wide-ranging product set to both existing and new customers.
How often do you have a formal look at the strategy? Who gets involved? How does all that play out?
The management team, the executive team, are constantly looking at the market and how we are doing and our product set. That's ongoing throughout the year. We do have more formal milestones each year. So we have a formal board strategy session where the management team and the executive team will come up with some ideas as to what we think should be the right way forward. Is it more of the same? Is it diversifying? Which areas should we grow in? That is then debated, challenged, and the consensus is reached as to what that would look like. That results in a 5-year plan, which is updated every year. The most important year of every 5-year plan being the first year, which becomes the budget. And then we will, at various points throughout the year, we will assess how we're doing against that plan. We'll probably have a mid-year review of whether that's still the right track for us to be on. Do we need to have a change in direction, or are we still comfortable with that remaining 6 months of the year and the remaining 4 years of that plan?
One other thing, you sort of described your approach to banking is kind of traditional banking. That's sort of the message I got. But you're also fairly tech-oriented, cloud-based, using systems, a big part of what you're doing. So how do those two fit together? Are they in conflict, or does one actually sort of support the other?
I personally have a strong view that you need to do both in this modern age. Traditional was the word I used. You could call it a relationship. It's all about people. But in this technological age, I wouldn't call ourselves a digital bank. We're not. We don't use automated credit scores, for example, to make a decision. We use experienced people, but they use information using technology in order to assess whether the loan that we're considering can be supported, and that's important. We're not a digital bank, we're not a technology bank, but as you say, we were the first business bank in Britain to be launched what's called in the cloud. So our infrastructure, we didn't have servers, boxes in our offices. It was the first one to be fully in the cloud. We're constantly updating our software in order to stay up to date. So I don't think you can have one without the other in this current environment. You need both.
Very interesting. One of the topics that seems to come up in almost every conversation right about now is AI. And just curious, do you see that making a big impact on what you're doing at Redwood, or do you think that's still 5, 10, maybe forever off in the future?
Very good question. Obviously, we're cognizant of AI and it's developing extremely quickly. We currently do not utilize AI. I'm sure that cannot stay the case. The question will be exactly how we utilize AI. We'll use it as a tool. We won't use it to replace what our values stand for, what our purpose is, how we evaluate, but it will make things easier and more efficient using both APIs and AI going forward. So no immediate strong plans to introduce it, but watch this space, because in 1, 2, 3 years, I'm sure my answer will be different.
Well, one other big topic in business nowadays is sort of the whole wellness agenda, work-life balance, all the rest of that. One of your values is tireless, which sounds great. How do you square that with work-life balance?
Yeah, so it's interesting that your interpretation of tirelessness then, understandably, you related that to the potential impacts on our colleagues in that they're being asked to work tirelessly. We do expect staff to work hard, but we don't expect them to work too hard at the detriment of their health. in terms of tireless, it really meant that we worked tirelessly for customers, and in particular that we will do it on a timely basis. It was an alternative word for speed, actually, because we got time in the strap line. But having said that, you make a very good point. So one of the things I'm most proud about at Redwood, I mentioned the high engagement score, which is basically a series of questions and what percentage give a positive answer across a whole range of questions that they're being asked. And we do this every 6 months, and 87% give a positive answer, which when you benchmark is extremely high. So I'm very proud of that. But it's not just about a number. It's not just about a survey. It's about how we live life, how we operate in the office. And I'm very proud of the culture at Redwood. So people work hard, but they work in a very nice environment. We get extremely positive feedback in various forums. We have a culture club made up of people throughout the organisation, not senior managers, who meet and discuss things. How can things get better? What's good? We have a staff survey every year. We listen. We have a communication every month to staff and get questions at that point. So, banks and every organisation, you need to work hard, but I think we get the balance right. And if we don't, we'll do something about it and listen to feedback.
Yeah. One thing you mentioned before that just interested to hear how it plays into all of that is, you're not 24/7. That's not part of your deal with a customer, with a client. Does that also mean that sort of your working patterns are maybe not strictly 9 to 5, but much more contained? Or has technology and everything else for your business, as with so many others, meant it's a little hard to switch off?
It's another excellent question. So look, our hours in terms of the ability to contact a helpline or a call, our small call centre is 9 till 5. And the core hours for all staff in the contracts are effectively 9 till 5, but we're flexible within that. So 9 till 5 with an hour lunch, so it equates to 7 hours at work is the standard contract, but we are flexible. So since COVID, we allow a hybrid working pattern whereby some people are, like a business development manager, will be based from home. Other staff may be based from home based on the particular requirements when we hired them. The majority are either based from our two offices, which is Letchworth and Warrington, and they are requested to work at least 2 or 3 days from the office, and generally most do. But that doesn't mean that they have to do every week, and we're flexible along that. And we do have situations where we see that people may need some to start a bit later, or some would rather start a bit earlier and finish a bit earlier. And we take that into account. So I think we're pretty flexible. Very important. Other banks and other firms are changing from allowing people to work from home, either full-time or half the time, a hybrid situation like us, and insisting that they work full-time back in the office. I can tell you I've got no plans to make that change. I think it works very well to treat people like adults and give them that flexibility.
In the 7 or so years since Redwood was founded, you've got a lot to be proud of. But when you look back over the 7 years, what are you most proud of?
3 things, I think. One was to get the banking license in the first place in 2017. That's not easy.
Why was that difficult? Sorry, I want to hear about the other 2, but why was that difficult? What was hard about that?
Because until 2010, there was not one new banking license in over 100 years in the UK, in Britain. Metro Bank were the first one to get a new banking license, because to pass the bar, to pass the hurdle that you need to satisfy, well, in 2010 it was the FSA, Financial Services Authority, and now that was split into the PRA and the FCA. But in those days, the second banking license granted was Cambridge and Counties in 2012, and I was heavily involved in getting that banking license. And since then, there's been a number, but not a huge number, of banking licenses that have been granted. Nothing like the United States, where there's thousands of banks. In the UK, there's less than 200. So it just shows that it's a high bar that you need to get through. You need to satisfy the regulators on both having the what's called prudential capability and meet their requirements, which is basically on capital and liquidity. You also need to satisfy the FCA in terms of how you treat customers, or customer conduct, IT, and so forth. And to get everything done, it's not cheap. You need to find somebody that's willing to back you, and then you need to go through the process. A lot fall down and don't never get the banking license. And secondly, once they get it, or get the initial one, they don't always survive. And it's been exacerbated by the recent economic environment. Banking valuations have plummeted over the last few years. They've started to go back up over the last 12 months, but it means it's very hard to find people willing to invest capital in banks. With any startup, you make losses in your early years. It's when you start to make profits and become sustainable. We did it in 3 years. So the second thing I'm most proud of is becoming profitable in such a short space of time. And the third thing I'm proud of is the achievement of the culture that I believe we've got at Redwood.
Mm-hmm. Looking back on it, is there anything you might do differently? Hindsight's always 20/20, but is there anything you might do different?
Hindsight's a wonderful thing. If I were to look back and say, what would I try and do differently? There's no guarantee. So we probably spent less money in getting the banking license than probably any others, because I'd done it twice. I did it with Cambridge and Counties, and so I'd gone through that experience. So we used external consultants less than perhaps most new banking license applications do, which was good for the shareholders and meant that there was less amount spent. And then our business model is pretty efficient, so we had relatively low post-launch costs. But having said that, we didn't need that much capital coming in to start with compared to others. And probably, if I was to do it again, I'd probably try and get more capital investment up front that may not be needed because of the level of losses incurred or the costs of becoming a bank, but would put us in a stronger position in order to be able to accelerate growth, perhaps more than we've been able to do. Because trying to raise capital in the tricky economic conditions is never easy. So perhaps that's the biggest thing that I would think about.
And any advice you might give to other CEOs as they're thinking about purpose and strategy for their own organization?
People are the absolute key. You need the right people. And then once you've got them, in order to deliver and achieve your stated purpose, you need to not just pay lip service to, but live your values in full, thereby deliver for your colleagues, who will then deliver for your customers, who will then deliver for your shareholders and other stakeholders.
As you describe it there, it's a really interesting sort of almost virtuous cycle to the whole thing.
I would agree.
Dynamite. Good. Gary, thank you so much. I'll look forward to catching up with you sometime in the new year.
Thank you very much. Bye-bye.
Thank you for joining us for this episode of The Purposeful Strategist. In addition to being available on our website, you can find us on Apple Podcasts, Spotify, and Google Podcasts. If you enjoyed this episode, please do follow us and leave us a 5-star review. It helps others find the podcast. Thanks again, and join us soon for the next episode of The Purposeful Strategist.